Sunday Night Futures Live. Hope everybody had an awesome weekend. I'm going to start things off by saying, please smash that like button, subscribe to the channel, and I have a tutorial out, 5-part video tutorial on my top 5 favorite candlestick patterns. Use the link below and get those videos. They're free of charge. Okay, so we have the futures that are open, and no great shock here. We already have some pressure on equities. The S&P E-minis are down over a 0.5 percentage point. They have gap down. We already have a new weekly lower low in. This is a 30-minute chart. Are we live on the YouTube? Facebook. No. Strange. What's going on with Facebook? Okay. All right. Back to the charts. I'm not sharing my screen here. Okay. Recap. We have S&P's down 0.81% and dropping. Let's take a look at the NASDAQ. Wow. NASDAQ down 1.19%. We're going to have some resistance down below. We're probably going to hit it soon. I mean, we're tanking right now. Support at 11,639 on the NASDAQ 100 futures. Let's take a look at the Russell. The Russell 2000, not as bad as the NASDAQ 100, down over a 0.5 percentage point. Looking at the VIX is in the lower right, 15-minute chart. VIX is breaking out in a very big way. Let's see whether or not we put in a new higher high versus Friday. We did pull back off the highs, believe it or not, on Friday to close with a topping tail. Let's take a quick peek at the US dollar. Man, brutal. The dollar's up strong. And that's because all the other major currencies are an absolute basket case. You have the yen, which had broken out. Let's take a look at a 4-hour chart here. Yeah, the yen had broken out on Friday, and it's consolidating. Let's take a look at the euro. The euro is continuing its breakdown. New weekly lower lows. So the dollar is causing a lot of problems for employers. Looks like we have some buying coming in on the NASDAQ. I don't think it's going to hold. Oh, I always do that. Forget it. Not a big deal. Okay, let's take a look at gold. Gold had an awesome day, and we are up over a third of a percentage point. Now, folks, I want to point something out here, and I'm going to go to a chart in a moment showing how traditional inverse correlations with gold are breaking down. Case in point, yields. When yields are strong, generally that's a headwind for gold. When the dollar is strong, 99% of the times, that's a headwind for gold, unless, of course, there is geopolitical risk. That's breaking down now. And as a reminder, gold flashed a bullish reversal bar on Friday closing up, but the price of the dollar went up dramatically, and so did yields. So at current, gold, new weekly higher high already. Let's take a look at silver. Silver is looking pretty good as well. So you're seeing rotation out of equities into the dollar, out of bonds into gold. Let's take a look at the agriculture space. Corn still consolidating here. Rough rice correcting. We are in a bit of a downtrend here. Could be a minor correction. Let's see how we closed out the week last week on rice. Is this last week or this week? This is last week. We broke support. We broke trend last week on rice. Let's go back to corn, see how it closed on the week. Corn looks like it wants to break out. Wheat futures. Wheat, be careful here. I know some of you like to trade wheat. It's breaking down. We broke down the week prior to last week. We tried to rally back, which we did in an effort to recapture. There was a rejection there at resistance. So be careful with the agriculture names. 30-minute chart doesn't look bad. What else do we have to go over here? Let's take a look at copper. Copper breaking down. Let's go to the weekly chart. Bear flag setup, breaking down. The chart we must keep an eye on, everybody's got to keep an eye on this, is light sweet crude. And we are down. That's good to see. We are down. Let's check out natty gas. Natural gas was up, now reversing. So we're seeing some weakness in oil and natural gas. Is it a 1 day, 2 day blip? I don't know, but we'll keep an eye on it. Let's say hello to people. Tom, hello, sir. It's possible. It's possible. Yeah. I think this is where we're going right here. 368. So right in your ballpark. This is pretty serious support on the spiders. Lois, hi Bob. It's time to fire your sound man. No voice. You can't hear me. How's it sound, guys? I'm not seeing Falcon. Hey, Franklin. Evening. Back and let's have. Yes, absolutely. It'll be good. All right, good. Thank you. Appreciate it. Pete. Hey, Pete. Danny. Larry. On March 25th, Jim Cramer said this bear market was over. We're down 3,500 points since that last call. He's establishment. He's establishment. Etsy. Probably. I think everything's going to be a drop for the next several days, with the exception of gold. You short from one price, McNeil. Welcome, crew. Franklin, always the gentleman. Falcon, if it wasn't for the ability to short sell, yeah, you're right. Yeah, I bought. I didn't want to be skewed to the bull side, but I am, unfortunately. So I'm gonna have to make some adjustments to the portfolio this week. Hopefully, hopefully not under duress. But we have a position long on Salesforce.com. I bought puts. I rarely buy puts as a protective hedge, and I went short of the Qs as well Friday afternoon. So that'll mute a good amount of any damage that we get tomorrow. But I don't like being skewed to the long side right now. So more to come, members. Not sure if gold is at a bottom. I think we're done on gold. Friday was a major tell. I think we're done going down. I got QQQ assigned at 304 after I sold puts at the worst time. Thank God I had. Good for you. Yeah, be careful selling puts in this market. It's very, very dangerous. This market's crazy like a hell. Yep. Donnie, hello. Falcon. Bob, did you get to New York? Yeah, I'm in New York. Monday seems bloody, no doubt. Is it time to start buying S&P leaps? No, no, I wouldn't buy them. Bob, did you get my message to watch Rumble videos on William Dowd and Greg Hunter's channel? I watched Greg Hunter. Did Greg Hunter interview William Dowd? I didn't see the message, Falcon. He had some pretty good guests on. I just wrote it down as a reminder. TZ Burton, hello, sir. Good thing, Lewis. Welcome. Trader Isaac, hello, Bob. Hello, Trader Isaac. BPT has a flag that looks like on a daily. If oil is weak, could grind towards 30. BPT, what is that? Out of curiosity. 95, 96, looking to see if it holds. Okay. Chart request LABU. Okay. Hi, Bob. Do you think we might test 340, which is 2019 pre-high by this fall? I think there's a very good chance. I think there's a very good chance. I'm going to go to a chart in a moment, going back to the 70s and similar type of situation we find ourselves in. Yoga Mac. Hi, Bob. Puts paid on Friday. Spider, you bought the puts, hopefully? You were long? Congrats on the trade. All right. Let's do a real quick check back, see how the futures are settled down here a little bit. The NASDAQs have come back a little bit off the lows. Keep in mind, this is on very thin volume right now. Gold looking really, really good. S&Ps look horrible. Trying to bounce back here. Okay. We will check back in, ideally before I log off. Okay. So what's going on out there? So what's going on out there is that we had CPI announced. Now, on Thursday night, I mentioned that I wouldn't be surprised to see the core number come in, and while the headline number might be pretty hot, I expected it may pull back in. And I was right on the core. The core did come in on a month-over-month basis. The however is it came in hotter than what was expected. And the CPI number, you put a one handle per month on an annualized basis, that's 12% that they're admitting to. So it was a horrible number. It was just simply horrible on the headlines. Then we get the University of Michigan sentiment survey that came out. Folks, this is the lowest read. You got to think about this. I have a chart up here. This is the University of Sentiment Survey monthly chart going all the way back to 1978, its inception. We have had an S&L crisis back in the 90s. We have had a dot-com crisis. We had the financial crisis. We had the COVID crisis. Never, ever have we tested the lows of 1980 when inflation finally peaked. On Friday, that report sent us pounding through that support level to new all-time record lows. Recession is coming. It is coming if it's not already here. You have the Atlanta Federal Reserve that's come out, and they downgraded growth for Q2. Again, they downgraded to growth of 0.09%. And, oh boy. NASDAQ just resumed its downward move. Buckle up, folks. So here's the visual that's attached to this somewhat, it's hard to appreciate it. It's a college survey, but it's important. But this is the reality. All-time record lows. But according to the President of the United States, the consumer is in great health. So take solace in that. Now, when you take a look at the consumer price index, multi-decade highs, monthly chart, overlaid here is, again, the Michigan in orange is the Michigan Sentiment Survey. You could see how decoupled from inflation it really has. So as goes the CPI now, inversely goes the sentiment surveys. And in gray, I have the 10-year yield, which is pounding higher. And when we take a look at economic data that's coming out this coming week, we have retail sales, Empire State Manufacturing Index, but we have the Fed this week, and they're going to be hard pressed not to go a half point again. They need to get these rates out there quickly because they plan on taking them all back or providing liquidity because we're going into recession. So they need to jack up rates right now and cause a lot of short-term pain, pushing the economy into recession. That way they're going to come back 6 months from now and then cut rates. So this is really it's all theater. It's really all theater. They have no intention of really fighting inflation. This is all political theater. So beware this coming week, folks. In terms of valuation going into the new week, Buffett indicator, we remain overvalued. Currently 29% or one standard deviation beyond historical trend in white. We have a long way to go, 29% to be exact, to get down to historical trend. Looking at the Shiller PE ratio, S&P 500, the mean is at 1695. We are still sporting a 30 handle on the Shiller PE ratio. Good for you, the Yoga Mac. On the S&P puts, right? Good for you. Bob, do you think that the coupling between gold and the market, like 1970, started on Friday? Yeah, that's exactly what I think is happening. And you saw the same thing after. I have a chart after the what was it 2001, the September 11th. You saw a correction in gold and in equities, and that was also the dot-com bubble blowing up as well. And while gold went down, the miners went down. All of a sudden, you've seen gold and the miners and silver. When I say gold, I mean the miners, gold, and silver. So gold ripped up higher well before equities ever bottomed out. So yeah, I have a chart to show you in a minute. Oh, you're talking about buying the put leaps. I think you meant calls. You're gonna pay a lot for them if you're gonna do it. Because remember, the volatility is gonna spike dramatically tomorrow. So the value of those leaps, the market makers are gonna price in a lot more vol. So if you're gonna do that trade, what I would do is a bear put spread, meaning buy a 70 delta leap, sell a 30 delta leap. So both of them are going to be puts, but you're going to sell deep in the money, you're going to buy a deep in the money and sell a deep out of the money. That way you have a couple of things going for you. One, you're helping finance the trade with the sale of that option. Two, while you're buying expensive options, you're also selling them, offsetting some of that implied volatility that's being built into the option. So that's the trade I would do if you're going to do it. UAL. I think Lewis had a bunch too. Calm, Mosaic, right? Boyle. Okay. Yeah, 70 to 30 delta. I did the same trade, but with the QQQ puts on Friday, and I'm still carrying them. So that's why I'm not freaking out about going into tomorrow. I put on some insurance policies on Friday, so I'm happy I did that. Okay, earnings. Not much. We have Oracle tomorrow night. Other than that, you have Adobe. I currently have a position in Adobe. I didn't want to carry it over to this week. I had to. So thank God, thank God I have a put position on the Qs. All right. So not much in terms of earnings this week. All right. Goldman Trader, central banks appear willing to break some things. Yes, they do. ECB, which put a knife in the European assets following the reveal of more protracted hiking cycle. But they're really not doing anything. They're not reducing their balance sheet. And that's why you saw the euro after they announced on Friday. Remember, the ECB reported before the United States CPI data came out, and the euro tanked and the dollar went through the roof despite the inflation number. So, following Friday's CPI report, and speaking of 50 basis point rate hikes, Goldman's U.S. economists are calling for that clip size at the FOMC meeting in June, July, and now September. So if you're wondering why we're seeing so much weakness in the markets besides University of Michigan sentiment survey, the consumer sentiment is nosediving. What is the Federal Reserve about to do? 50 to 75 basis point rate hikes, June, July, I guess August is no meeting, and September. So buckle up. Buckle up. Fatal macro warnings. We're going to need a bigger boat. Love this one. So, counterparty dysfunction explained. Once again, and unbeknownst to just about everyone these days, of dysfunctional liquidity marriages, i.e., distrust. Basically, what this means is that banks are not trusting other banks to lend money. We saw this during the GFC, the Great Financial Crisis, and that was a precursor to things going really, really bad, really, really quick. And as of April the 21st, the Fed has been making daily loans. You don't hear about this much. The Fed has been making daily loans into the reverse repo market, skyrocketing to $2 trillion per day. Here's the chart. Before that April date, you saw hardly anything. Most of the time, it was flatlined. Now, there's something wrong. There's something very, very wrong. What ghastly data, like the chart boils down to, is the Fed is providing the money market. Remember, back in the Great Financial Crisis, the money market funds broke the buck with mind-numbingly massive doses of daily liquidity to keep it alive. They do this by swapping out treasuries for money market funds in what is the churning equivalent of treading waters with fiat currency. Where to hide? Gold. Simple as that. Gold's bull cycle is just the beginning. Is just beginning, not just the beginning. And we'll go to a bigger chart in a moment. But this is the commodity index moving up higher. But you got to watch what commodities you're trading now, right? We're seeing certain commodities break down while others are coming back to life. So here's a chart of gold, quarterly view. Now, back in 1971, when Nixon took us off the gold standard and inflation began to rip up higher, you saw a major correction by about 50% in the stock market. We are here. This is hardly a blip on the screen. So when asked, is 360 achievable? I think it's achievable. I think we're going beyond it on the spiders. And while gold saw a bit of a reaction due to equities, overall, gold broke out. And this was very much true during the correction, bear market, I should say, of 2000, where gold went on a tear as equities rolled over. That was the safe haven. And I have overlaid here the US dollar in green. And you could see that gold started bucking up higher despite the fact that the dollar was still fairly strong. We did double top out. And on Friday, as I mentioned, and as of this evening's futures action, gold was up on Friday, along with the dollar, along with yields. And I think that's starting to happen once again. I don't believe that the dollar is going to remain strong for all that long. I think that you're just seeing a reaction to the ECB's statement. I think the dollar is going to run out of steam in fairly short order. Once that happens, once the dollar loses steam, like back here, it's going to go on a tear. Once you see this going in the wrong direction, down, gold is going to take off. And it doesn't even need to go down, really. It just needs to go tread water. Now, I've been saying for weeks now that I did not believe that the bottom was in this sell-off. This bear market was not over. And the reason why I didn't believe that it was over is simple. You go back to prior peaks in the VIX. COVID sell-off, we went to 95 on the VIX. Taper tantrum back in 2018, we went to a 50 handle. 2009, that's a GFC. 2008, GFC, we went to nearly a 90 handle. So we haven't even hit a 40 handle yet. So given the fact that equities are overvalued, we have a Federal Reserve that is raising rates, and they have to raise rates more dramatically. We have idiots running this country. I'm going to go to an article in a moment. They're going to make some bad decisions soon. They have to, because they have to show they're doing something. Even though it's bad policy, they need to show they're doing something, because the elections are coming. Gold, monthly chart. Now, take a look at this. What I'm showing here on this chart is a correlation of gold to the 10-year yield in gray, correlation gold to the US dollar. Generally, they don't trade in tandem. That inverse correlation is breaking down. What's happening is that despite the fact that the dollar is rising and the fact that yields are rising, gold is not reacting. In fact, it is up on the month. Money is rotating into gold. It's rotating into silver. So we are at the very early stages of a breakout here on gold. And I wouldn't be a bit surprised to see by the end of the year that we're at all-time record highs. So if you're going to ask me the question of, do I buy the GLD? No, you buy physical gold. I have an ETF for silver. I want to buy some physical silver. I own physical gold and own the gold mining stocks. Own the gold. We have a put op. Excuse me. We have a naked put option on NUGT, and we have a bull call spread on NUGT as well. That 70-30 delta trade, but on calls that I mentioned earlier. All right, protection from a currency collapse. The bankers are getting afraid. They see what's happening here. While credit markets seem becalmed, Financial conditions are rapidly deteriorating. Just last week, Jamie Dimon of JP Morgan Chase gave the clearest sound signals that bank credit is beginning to contract. Russia has consolidated its ruble, which has now become the strongest currency by far. Think about it. They're winning the war geopolitically, economically, and against Ukraine. I feel bad for the Ukrainian people. That Zelensky, he could have avoided this war. He didn't do it. All he had to do was stay neutral. So I am not sympathetic to the government of the Ukraine. The people, my developers are Ukrainian. They're very, very nice people, very good people. Russia now appears to be protecting the ruble from those developments in the West. They see what's happening here. They've seen it for years. I can't count how many articles I've read about Russia and China building up their gold stashes when gold was cheaper than dirt. Now they're completely protected and they're cutting themselves off. Well, we cut them off of the SWIFT system. So they're good. They're happy. China has yet to formulate a currency policy, but is likely to back the renminbi with a commodity basket. You can bet there's going to be gold in that commodity basket. So the reason why I had this article up here is that fiat currencies are failing, whether it's the dollar, the buying power of the dollar is obviously weakening because inflation is going through the roof. You have the euro, which is collapsing. The Japanese yen is a basket case. So from a position of strength, I mean, the Russians are in a stronger position than we are. I'm not going to read all of this because I have a lot of charts to go over, but it really just reiterates. I'll share this article if you want to read my highlights. Basically, what this is saying is that even the Fed, which is in a far better position than the ECB and the Bank of Japan, has admitted unrealized losses. Think about it. The Federal Reserve is the largest buyer of treasuries by far. And they have been for a long time now. They're getting whacked. This chart is broken. This is a quarterly chart. We are breaking down seriously on the 30-year Treasury bond, along with the 10-year. Yield curves are inverting now. We're going into recession. The yield curve is inverting. I didn't go over that. I need to. This is important. This has not inverted yet, but it soon will be. Here's the yield curve. I went over this on Thursday night. And since Thursday night, we have one trading day, that Friday made a big, big difference. One trading day on this monthly chart, we are now at the precipice of going negative 2s, 10 Treasury yields. Basically, what this implies is that the 2-year Treasury yield is higher than a 10-year Treasury yield, or about to go higher. People don't want to lend out 10 years, 30 years, and get paid some anemic rate for all the risks they have to take on. Lord knows where we're going to be in 10, 30 years. So they got to loan out at higher yields on the 2-year. And that's why you're seeing the yield curve begin to collapse. It's all about fear. Banks are not trusting banks. And you're seeing the Federal Reserve having to do $2 trillion in swaps $2 trillion in swaps every single day. I mentioned Yellen earlier, and we have a bunch of problems here, and a lot of it is not Biden's fault. He's going to take the blame, but this monetary roach motel, as Peter Schiff would say. We checked into this monetary roach motel back in 2007, 2008. Technically, even before that, under Greenspan during the dot-com bubble. So you can't blame Biden a ton, but he's going to make it worse because the polling numbers are horrible. They're absolutely horrible. You have these, you have congressmen that are out there. They're not running for re-election. They know they're going to get destroyed. So if he has to run, if he does run against Trump in 2024, that's a big steal. That's a huge steal. And everybody's going to be watching. So I don't know if he's going to be able to do it. So you have these people that are going to have to make the problem worse. And here's who's running the ship. And I'll go to the way they're going to make it worse in a moment. How inflation got away from Washington's screw-ups. Yellen, you see, is a faux screw-up. She feigns ignorance and befuddlement over today's inflation. A year ago, Yellen said there would be small risk of inflation and that it would be manageable. Now Yellen says she was wrong then about the path inflation would take. The truth is Yellen loves inflation. And here's the dirty little secret. It's not just Yellen. Here's what she said in 1995. To me, a wise, humane policy is to occasionally let inflation rise even when inflation is running above target. Now, here's a Keynesian, as liberal you can get, supposedly the defender of the downtrodden. And who gets hurt worse by inflation? The poor. But the reality is this: they don't give a damn about the poor. What the reality is the only way that they can maintain power is this. This is perfect. How inflation got away from Washington screw-ups. Yellen has spent a career working at the Fed and Treasury. She believes in the cause, and her cause is to stimulate inflation so that Washington can pay back the federal debt with dollars diminishing in value. That is the essence. She wants to inflate away the debt. It's not just Yellen. This is the plan. To hell with you, me. We're going to pay a price. It's going to be unimaginable. But they did the same thing after World War II. We had debt that was in excess of 100% of GDP. What did they do? They let inflation run. The thing was, back then, we had a manufacturing base. We were exporters. We were a net creditor country. Now we're bankrupt. We have over 200 trillion in unfunded liabilities that we're on the hook for. So it gets better. This is where they're going to go. And they know it doesn't work. It doesn't matter. It's all about the clickbait. It's all about the polls. It's all about getting the propagandists on the mainstream media running with the new narrative. And the new narrative is going to be President Biden is fighting for the consumer by what? Price controls. And this article is appropriately titled, should stay in the history books. So in short, price controls don't work. It's a great headline. They tried it last back in 1971 to 1974. It didn't work. The impact of price controls, they allocate scarce goods and services to buyers who are most willing to and able to pay for them. They're rich. They signal that a good is valued and that producers can profit by increasing the quantity supplied. So in short, they don't work. If a producer can't make money on a product, he's not going to produce it. Then there's going to be scarcity for that product. But it doesn't matter if it doesn't work or it does work. They don't care. They want the headline. Expect this any day now, because the elections are coming. And I think what they're going to do next is they are going to throw this guy under the bus. And it's already begun. The narrative has already begun. Ukraine fears that they might lose Western support over war fatigue. And Biden throws Zelensky under the bus. Ukraine leader brushed off invasion of warnings. If we do get some change in narrative, and the Russians claim victory and withdraw, they're going to keep those eastern territories. You may see a brief rally in the markets and a brief sell-off on gold if that does occur. And I think I'm stretching it a bit here that it's even going to happen. But if he can free up the crops over in Ukraine, that means more wheat that are sitting over in silos. If he can get oil flowing out of Russia again, that brings down the price of oil. Simple as that. This is not helping him any. Zelensky is dead weight. Let's do some chart. Oh, the other chart, folks, we need to go over is we get the CPI report every month. But one way that you're going to be able to monitor what the next CPI is going to look like, watch crude oil. Crude oil was one of the primary drivers. And in fact, if you broke out the core CPI, it would have been even lower. The only reason why it was as high as it was is that you had sectors that had exposure to oil or natural gas, their costs went up. So their prices had to go up. So even though they're not necessarily an oil commodity, they're associated with the oil industry and it's driving up everything. Oil seeps into everything. So this chart here on a quarterly time frame, it's very extended. We're due for a pause. We're trading up into the third standard deviation Bollinger Band. We're probably going to be, this is when Russia, this spike here, Russia invaded Ukraine. We stayed there briefly, but we're probably going to run through that. And we're going to test the highs of 2008. Should we go much higher than that? I think that you're going to see a lot of demand destruction. And it may have already begun. Because when you take a look at a weekly chart, while we could still bolt up higher here, you saw a doji star formation last week. And that's a sign of indecision. It could be because we're just shy of a resistance level and traders, they're becoming a little bit shy of buying oil here in front of that resistance level. Or you could see that demand is dropping off some. But looking at the indicators, momentum indicators, they're looking very, very strong. So I wouldn't be the least bit surprised to see another spike up higher here. But watch oil. If oil begins to roll over, watch equities rally. Let's do some chart requests. We got a bunch to go over. Let's go to comments. 2 trillion. Yeah. Crazy, isn't it? It's amazing, Donnie. And nobody talks about it. Will the real fiscal conservatives please stand up? Yeah, right. Whatever happened to them? The only one that's even close to being a fiscal conservative is Rand Paul. God bless him. Hey, Bob. Oh, Bob. Oh, late but here. Hey, yes. Hope you had a great weekend. Same to you, pal. Gold leaps. Yes, I like gold leaps. Yes, like and subscribe, folks. Please help me out with the YouTube algorithm. Please like, subscribe. All right, let's do some chart requests. I have a bunch from the members. O'Reilly Automotive. Folks, we're going to be using TrendSpider, automated technical analysis, 35% discount code below. I don't like this chart. Weekly chart, horrible. Lower highs. And we're breaking to new lower lows. You had a lower low back here. And I think we are going to break down yet again. This is a short. I would nibble here to the short side once we break around 580 per share. I would lean into that short. Daily view. Yeah, this is going down. Avoid. CMG, Chipotle. Weekly chart. We closed out the week last week at support. This is a short. If we close down below the lows of last week, I would not buy the stock yet unless the daily chart could influence me. Daily chart, no, I think we're probably going to break here. Stokes are rolling over. Volume rolled in heavy on Friday. So this doesn't appear to be a bottom. It was setting up with a nice cup with handle formation. That's over with now. It looks like we're going to break to new lower lows on CMG. Roku. This is a very speculative stock. Roku's going lower. Last week, we put in a bearish reversal bar. Here's support. We break through it. Roku's a short. Daily chart. This is what I mean by automated trend lines, folks. Click of a button. Here you have a rounding top. Let's throw on the automated trend lines. We had broken out here on May the 27th. If we fail to hold this support level and we break back down into this trading range, Roku is in a lot of trouble. I don't want any sensitivity. What are you doing to me here? There we go. Don't like it. Etsy. Weekly chart. Bearish reversal bar last week. We are in a clear and defined downtrend, folks. A break below 68.40, it becomes a short. Hell, you could short this now. Use a stop on a breakout above this upper band of resistance at around 70, around 79 bucks a share. Daily chart. Yeah, this is a short. We broke down. Let me start here. We broke out back here on the 2nd of June. You know, one thing about bear markets is that you see this quite often. They're called bear traps, or I like to call them breakout point failures, where you have a very good looking chart. Here, I mean, really, really nice. We broke out. You would think that after a retest, it's time to buy. You got to follow through. What happened? They pulled the rug out from underneath it. And now it's broken back down. This is going lower. Normally what happens when you get a bull trap or a breakout point failure is that you retrace all the way back down to prior support. And you have one here at around 69 bucks a share. After that, if it fails, it's coming down here to the lower band of the declining downtrend channel. Lord knows it's got in the 50s. So be very, very careful about buying breakouts. You got to stay small. I'll show you a stock that I was looking at last week. What was it called? Forget it. I don't want to bore you. XOM. Yeah, I forget who said they were short of Exxon. You know, last week we saw a big topping tail. It's still closed up. The correlation with the price of oil is very, very strong. Oil is coming in now. I don't know how long it's going to stay down. I think that if oil begins to break down, you should stick with the XOM short. If oil begins to pick back up again, you got to be very, very careful. I would stay very small with that short. Set a real tight stop so that if you have a profit now, which I assume that you do, at least you get out at break even, so you don't lose any money on it. But this is not a broken chart. It's still pretty healthy. By far, it's the best chart I've gone over tonight so far. Daily view. So yeah, it pulled back with oil. We are at support. Volume rose on Friday. Watch for a retrace. Watch for a rally back. Use a 15-minute chart or a 30-minute chart for a rally back and a lower high. And if we get that lower high and we break down to new lower lows, I would lean into the short. BPT. Oh, Prudhoe Bay. This is a trust, I believe. Yeah, it's a trust. It looks good. Really good week last week. Good volume. Stokes are overbought. I wouldn't buy it here. If I were long, I'd be using a trailing stop. We broke out June the 6th. We've been consolidating. We had a failed attempted breakout or continuation breakout on Friday. If it fails to hold support at around 2285, we close down below that mark, I would stop out. If it's a trade, if it's an investment, different story. But if it's a trade on a breakdown below 2285 and we close there, I would be out. Sorry. LEBU. LEBU got destroyed last week. Now, what we didn't do is we didn't break weekly support, which is good. But volume did rise. This is a leveraged ETF, folks, so not for the faint of heart. We had broken out on the 30th. You could argue that this is a retest, the week of the 30th. This is a retest of the breakout point on a weekly time frame. So keep an eye on this. If we hold this breakout point and we see buyers move into this market, we've already broken out on a weekly time frame. Daily chart. Daily chart not looking good. We did form. Here's the automated trend lines for you again. Take them off. You can't buy it. It's probably going to come down. You're probably going to see a four handle again on LABU. I wouldn't buy it here. UAL, avoid right off the bat. Avoid. Bearish reversal bar on the week. This is a weak stock. Rising oil costs. We broke down below lower band of support on Friday. This is a short. Avoid it. Volume rose. No bueno. Cal-Maine Foods. We are positioned here in Cal-Maine. We also have a position in LABU for full disclosure. Weekly chart. LABU. We sold it up here. We began buying it back on this pullback. It hasn't done much except for get a little bit weaker, but we're holding support. It was a down week last week, but we bounced off of a good support level. Stocks are going in the wrong direction. We'll prefer to see them rising. Daily chart. Good relative strength on Friday. And I don't mean the RSI. What I mean is relative to the S&P 500, Cal-Maine Foods was up. So that's a very good thing. But I wouldn't be a buyer until we broke out above 46 bucks a share and we closed there, most importantly. Up volume on Friday was very, very light. Mosaic. It's in trouble. You have a lower high. Now we're breaking down to lower lows. We're holding a support level. They're going to probably try to rally this back in an effort to try to recapture 55 bucks a share. If it fails, it's probably going to break the support level and head lower. Daily chart. They tried to rally it. Again, this is what I was just saying on the weekly chart. They broke it down on the daily chart, tried to rally it back, rejected. This is going to go lower. I would avoid. Oil. It's consolidating here. It had a heck of a volatile week last week. Down volume was very heavy. If we put in new weekly lower lows, I would not touch this. I would stop out. However, if we close above 130 per share, it's going a lot higher. Daily chart. Daily chart, we had a brutal 8th, nice reversal bar, 9th, consolidation day, 10th. I think that we could pop up higher and at least try to take out this prior high. If we put in the lower high and break down below the lows of the 9th, that probably means that that weekly chart is falling apart as well. So be very, very careful here. I'm over. Oh, I have one more to do here. INDO. Avoid this. We were long of this. Oh, no, this is not the ETF. We were not long of this. We have a bear flag set up. We broke that bear flag set up. We broke down last week. We are going lower. We're probably going down to $8 a share. Daily chart. TrendSpider is saying $9.15 is going to be a support level. Okay. They're usually pretty good. So I'll go with that first. Tesla. Fucking Bob, I'm stalking these stocks. WCVNA. Falcon, I don't have the time tonight, pal. I'm already over. So my apologies. I can't go over them all tonight. Carvana, I don't think I like at all. Um, awesome work. Thank you very much. Appreciate that. 77 man, 77. Thank you very much. Click the like button, please. Do you think Spider will make right shoulder before melting down? It's already made a right shoulder. The head and shoulders setup is broken on the spiders. Do you think GME could squeeze, Bob? Yeah, they could squeeze it. Uh, just be careful if you're going to trade options on it. It's not marginable. All right, we'll leave it off with Tesla. Uh, Tesla weekly chart. I have a position here on Tesla. I have a strangle on it. Deep out of the money put sold. Deep out of the money call sold. I'm down at the 505 strike on the put side. They expire on July the 2nd, the 22nd, July the 22nd. I do think that I am probably going to get tested. I think that Tesla is going lower. We broke weekly support last week. We put in a new weekly low on volume. We broke down on Friday. I think Tesla's going lower. Let's circle back. Sorry I couldn't get to all your requests, folks, but I'm really running low on time. I want to take a look at the futures action, see what we're doing here. 15-minute chart of the NASDAQ. NASDAQ stable, down about at 1.5%. Let's check in with the dollar. The dollar fading a little bit, but still strong. How is that fade on the price of gold? Gold has faded a bit as well. Nat gas, which we just spoke about, weakening. Nat gas is down nearly 2%. So be careful of that Boyle trade on Monday morning. This is not looking healthy. Outside reversal bar, 4-hour time frame. This is as of today. Be very careful with natural gas. S&P 500, holding the lows. The Russell 2000 has weakened up, but like the S&P and the NASDAQ, it's holding the lows of the session. And let's leave it off with the Pimp Mac Daddy of them all, light sweet crude. Light sweet crude is down. And this is what, if anything, could salvage this market in the coming days. If we see a big correction in crude oil prices, it's no secret that crude oil prices are what's driving the CPI numbers dramatically. Remember, the core number, that backs out food and energy. While it came in hotter than expected, it's still lower than the prior month. So the trend is down, no matter what the economist said it was supposed to be. The trend is going down. And the only reason why it came in as hot as it did is because of input cost from oil. If oil comes in, it's a major factor in the near-term direction of equities. You're welcome, Lewis. Yoga Mac, thanks for being here, pal. As always, love your participation. TZ Burton, you're very welcome. Franklin, my main caballero, another great evening and even more insights in the week to come. Yes, sir. Yes, sir. All right, folks, thank you for being here. It's my honor. If I could ask you to please smash the like button and subscribe, it would really help me out with the YouTube algorithm. Also, if you want my weekly commentaries, the best stock charts, I'm going to start doing them bi-weekly. I haven't been doing them much lately. So if you want them delivered to your inbox free, there's a link below to my 5-part video tutorial on my top 5 favorite candlestick patterns. It's free, no spam. You'll also get the free weekly commentary as well, best stock charts. I think I'm going to be doing it on Wednesdays, midweek, and then on Saturdays. So expect some changes coming up soon. Log in now, subscribe now, and everybody have an awesome. Oh, look at this. Do we have a salty shout out to the Salty Army? If you're not watching the Salty Cracker, you ought to go over to that channel right now. Awesome crowd, great party, live streams tonight, so every Sunday, every Wednesday, and I believe every Friday night as well. Great crowd, true patriots. God bless them. Everybody have an awesome night. Thanks for being here. Be well and have a profitable trading week. Take care.